Using the annual gift limit can be a fantastic way to pass on wealth to friends and family. It's a tax-free way to pass on wealth to an individual. But the problem many of us face, or the fear that many of us face, is that if we gift over the gift limit, we're going to owe a tax on the gift. And it's you, the gifter, that owes that tax, not the recipient. Well, in today's video, we're going to show why the gift limit isn't exactly what you think, and how by using certain exemptions, you can gift significantly more than you think in a tax-free manner. Again, to the people that you care most about in your life. So let's get into it. So let's first cover broad strokes what the IRS considers a gift. Now, the IRS considers a gift any transfer to an individual, either directly or indirectly, where consideration is not received. Basically, what this means is whether you're transferring cash or you're transferring a given asset. Anytime that is transferred to another individual and you're not receiving anything in return, that is considered a gift under the eyes of the IRS. Now, it's important to note that the IRS allows you to give a certain amount to each individual up to a gift exemption. Now, in 2022, this gift exemption is $16,000. And it's important to understand that this gift exemption is per person. So let's say you're a grandmother and you have 4 beautiful grandchildren. Well, you can gift $16,000 to each of those grandchildren and still be underneath that gift exemption. So a total of $64,000 in total gifts. Now, there are a few things that aren't considered gifts in the eyes of the IRS. So any gift underneath the exemption would not be considered a taxable gift. Anytime you pay tuition or medical expenses for an individual, that once again would not be considered a taxable gift, as well as a gift to a political organization would not be considered a taxable gift. Another important thing to note here is that gifts are not tax deductible. So that grandmother that gifted $16,000 to each of her 4 grandchildren, she is not able to include each of those gifts as itemized deductions and write that off of her tax return. Now, a big misunderstanding of the gift limit is most people think once they start to gift over $16,000 in 2022, they will start to owe gift tax. Well, in this video today, I'm going to show you a few different ways that the gift limit is not exactly what you think. First off, a big misunderstanding around this gifting exemption is that gift exemption is per person and per recipient. So what I mean here is, let's take an example here of we have 2 parents, and these 2 parents want to gift the annual gift exemption to each of their children. And so to their daughter, they're able to each gift that $16,000 exemption. So there's 2 people in a couple, $16,000 per person. In 2022, they can gift $32,000 to their daughter and not have to worry about any gift taxes. Now, how does this change when they're gifting to their son and his wife? Now, in this scenario, there are 2 parents and there are also a son and a wife. So there's 2 individuals that they're gifting to. So each of them have a $16,000 gift exemption for each person they're gifting to. So they can gift $32,000 to the son. They can also gift $32,000 to the wife. And so there's an added layer underneath this gift exemption where it multiplies based on the individual's gifting as well as the individual's receiving. If we're gifting from a couple to another couple, we can multiply this gift exemption and not worry at all about gift taxes. So that's very important to understand from the start here. Now, even beyond this gifting limit, these parents can likely give far more to each of these individuals, likely without any negative repercussions. And let me show you exactly how. So let's walk through an example and show what I mean. So we're going to use an individual here, and we know that the individual gift limit here is $16,000 per year. But what happens if somebody wants to give $56,000? So they want to give $40,000 more than the annual gift exemption. How much tax would they owe, and would they owe tax on that $40,000? Well, many people think that once you go over that annual gift limit of $16,000, you start to incur those gift taxes that you now have to pay. Well, in fact, that's not at all how this gift tax works. So over that gift limit, they're going to have to take another step. They're going to have to file something called Form 709. We'll cover that here in a second. Over the gift limit, all that happens is the gift that you are taking over that gift limit now counts against something called your lifetime exclusion. Now, in 2022, your lifetime exclusion per person is $12,060,000. So in this person's situation, what would basically happen is that $40,000 over that gift limit would simply be deducted from their lifetime exclusion. At the end of their life, when they're passing on whatever they have left to some individual, if they pass on more than the lifetime exclusion minus all of the gifts that counted against their lifetime exclusion throughout their life, then they will owe estate tax. But for the vast majority of people, many of us will never come close to passing this lifetime exclusion. And so for many people, if you're looking to gift to individuals, you can gift far more than you think and have it be a completely tax-free gift. All you need to do is simply file Form 709. Now, there are a couple important things to understand around this lifetime exclusion. The Tax Cuts and Jobs Act is set to expire in 2026. The Tax Cuts and Jobs Act also raised this lifetime exclusion. So note that the lifetime exclusion is likely to cut in half in 2026 if there are no other changes made by Congress. Now, once you're over this lifetime exclusion limit, gift taxes vary from anywhere from 18% all the way up to 40%. And then if we think about it, for a retiree that believes they're going to hit this limit, it's much better off gifting at a younger age, maybe early in retirement, than it is waiting for those assets to grow and then surpass that lifetime exclusion later in life. And so let's say that we're a retiree that may pass this lifetime exclusion limit. Well, it's better off to gift when we're younger. Let's say that we're looking at gifting $50,000 when we're younger. Well, if we give $50,000 right now, we're going to have $34,000 eat into our lifetime exclusion limit. But if we keep that $50,000 invested in our retirement, and that $50,000, let's say, grows to $250,000 by the end of our life, well, all of a sudden that $250,000 will eat into our lifetime exclusion limit at a lot greater rate than if we would have gifted earlier in our retirement. And so when we're gifting younger, we get more out of this lifetime exclusion than if we gift later into life. Now, for those that go over this annual gift limit, they will have to fill out Form 709. And this is basically letting the IRS know that you went over this gift limit. Now, this is a pretty self-explanatory form. It doesn't force you to pay taxes. It just forces you to eat into that lifetime exclusion limit. So it's very important to be filling out this if you go over that gift limit in 2022 and beyond. And so if you like this tip, you're going to love the tips in this video right here, where we talk about 8 tax tips that a retiree in their 60s can use in order to set the rest of their retirement up for tax efficiency. Thanks for watching. Always remember, you don't need more money. You need a better plan. We look forward to seeing you in the next video.